Welcome to ESGX Live, the community for information and education to inspire collaboration and action on all things related to sustainability. With me, Nigel Lake in New York, and my co-host for the last time in Chicago before he moves to France tomorrow. Today, we're going to step back from the noise a little bit and from some of the nasty politics around the world and look at three parallel revolutions which are already having a significant effect in a variety of different places. One is robotisation and the march of the automation of decision making and everything that means for jobs. And this is from checkouts and truck drivers through to professional services and beyond. The second is everything around renewable energy. We see a huge amount of that in many parts of our lives already. Almost all the car ads at the Super Bowl at the weekend were for electric vehicles, not for fossil fuel vehicles. And thirdly, the bioeconomy. As we work through this, keep in mind the word efficiency. Not just economic efficiency, but also efficiency in how we use and interact with our environment and what we can do for society and the people around us, particularly perhaps those who are most excluded right now. We're going to look at this through the lens of Australia, an advanced economy with a great educational system, great healthcare accessible to all, a strong economy with low unemployment, with strong social welfare, livable cities, lots of space and lots of sunshine, but with a bit of a dark side in that its fortune historically has been based on agriculture, farming, fossil fuels and coal and gas exports, and things like iron ore, which has driven enormous wealth creation, particularly over the last 20 or 30 years, but also which are all industries that are perhaps more associated with what some would call the old economy. And there has been a significant decline in fixed capital formation. We'll come back to what that really means very shortly. So it's a country at a crossroads, an election this year, an economy whose performance has not quite as shiny as it once was, perhaps, a stock exchange whose performance has been really terrible compared to countries like the US or even Germany and Japan, and where I think there are amazing opportunities and some great lessons for other countries. So with that as my introduction, let me welcome to our virtual stage Adam McKissick from the Business Council of Australia, Mara Bunn from Australian Ethical and various other entrepreneurial companies, and Robin Elliott, who has a fascinating background as well. So as they turn their cameras on and join us, I was going to start with Adam. And you have spent most of your career in government in Australia and includes some time in China along the way. And we are here looking at the Australian economy and where the future is going. But what is the Australian economy? What is this thing that we're talking about?
Thanks, Nigel, and good to see everybody. Really, the story of the Australian economy in the last couple of decades has very much been about sort of mining investment. So the rise of demand from as Asia has risen, particularly China, we've seen this boom in resources demand, which has led to this mining investment boom in our country. That's created a lot of wealth in Australia. It created a mining investment boom. On estimates we've done, it's increased income per capita by about 45% over 20 years. So mining has been making us very wealthy. This China boom has made us very wealthy. But it's also really changed the look of our economy at the same time. As a result, we're sort of dependent actually on quite a narrow range of commodities to drive our exports and our growth. I think in the last year, 1 in 3 of our goods exports was iron ore. So that one good accounts for a lot of our exports and a lot of our wealth. In fact, a handful of commodities really drive our export performance. I guess as we've put more resources into the mining sector in the last 20 years, we have seen this decline in manufacturing in Australia. So 30 years ago, manufacturing was our biggest employer. It was about 15% of our economy. Now it's about 7% of our economy, which, if you look around at other advanced economies, that's a very low number. So we have a very small manufacturing sector now. So we have seen a sort of change in the look of our economy as a result of sort of taking advantage of these opportunities coming out of Asia. So where does that sort of put us now? And I think certainly there have been concerns, particularly through COVID, around supply chains, our dependence on global supply chains to provide things like manufacturing. So I think that's starting up a bit of a sovereign capability debate in Australia, and that can kind of take a number of directions. I think the other thing to think about, and the BCA has done quite a bit of work thinking about what are some of the forces of change impacting upon us going forward. A couple of big ones are obviously climate change and decarbonisation. Now, nearly half of our exports are carbon intensive. About 1 in 4 jobs in the Australian economy are in carbon intensive industries. So that decarbonisation trend is a big deal for Australia. And I think a second big force is the sort of the tech boom, I think, Nigel, you like to call it the robot revolution. And that's really changing the nature of investment, sort of moving away from that sort of more nuts and bolts investment that we've done a lot in Australia, more towards intangibles, and sort of importance of human capital is rising. So I think there are questions about how well we're placed to deal with some of those big changes, and what do we have the right capability moving forward to sort of take some of the opportunities that come out of these changes. We actually do have a lot of opportunity to lead in clean energy and so on. But how do we repivot our economy to take advantage of these trends? And I think in areas like the tech revolution, we are competing against much bigger markets than our own. We are often remote from some of those bigger markets. So we really have to do better. We have to be more nimble, and probably more nimble than we have been in the past. And I'll mention.
Sorry, go on.
Before I go to the next person, but
I was going to ask, because you've come from the world of a significant career in government, doing some fascinating work there. Now working in the BCA, and I know for people that have been trying to drive this change, and some of them have been trying to drive this change for some time, and some, the Atlassian business is a case in point. A company now with a market value that's been north of $100 billion US, which would make it one of the largest listed companies in Australia, has shown that amazing things can be achieved. Is there, I think, before we get into some of the detail, what do you think the appetite is like in the business sector really to start to grapple with these issues now? It's and kind of topical in an election year where to some degree, what happens now really is going to shape the future of the country for the next decade.
Yeah, it's a really good question, Nigel. And I think working with the business sector it made me a lot more optimistic actually about how we can tackle these changes. I think business often gets a bit of a bad rap about being a bit short term, a bit profit, too much driven by short term profit incentives. And obviously, those incentives are there. But actually, business often has longer planning horizons than government. We have these 3-year election terms at the federal government level. Businesses are kind of looking 10, 20 years ahead with their investment plans. So I actually find business is often a bit more forward-looking. And I think business has been way ahead of government on climate change. I think our businesses have been adopting net zero targets for a while now, and that's really been accelerating. They've actually been doing things to meet those targets, despite being sort of a bit held back by lack of an economy-wide carbon price and that sort of thing. So it's actually interesting that business is sort of getting on with things. So regardless of the policy debate, I think it's very encouraging that business is just keen to get on and do it.
Yeah, absolutely. And I'm going to maybe bring in Robin now, because Robin's background, previously CTO of Foxtel, in a similar role in one of the largest property companies in Australia, and has done a host of other things along the way. I describe Robin, she doesn't know this, but to most people as the smartest CTO I know pretty much. And I'm fascinated in your perspective on all this change, because I know you've looked at some of these questions about what large businesses can do and how they can do them. Interested in your view on where you think progress is happening, where it isn't, and what is that? What should we all be doing to try to accelerate the change? And by the way, before you answer that, to everybody who's joining us, please do, if you have thoughts and perspectives yourselves, please put them in the chat. We will see them and respond to them. And please do ask questions. If you do, that will make it more lively and mean that I don't have to come up with them all myself, which is even better. Robin.
Yeah, thanks, Nigel. So what I'm seeing at the moment is a shift towards a bit more future thinking. I think some of our innovation agendas in the large corporate sectors have been derailed a little just because of the demand to so rapidly transition our workforces to digital and remote working. We've made an enormous amount of progress, and for those of us who've been arguing at CTO level for years to do that, it was just remarkable how quickly that could actually happen when the right incentives were in place. So now that that's in place,
just as an aside, it's been amazing for us. I think we're 30% more efficient than we were 2 years ago. Yep. And it's made it, it's made it easier for us to work on projects that span lots of different regions in a way which we could have done before because we were used to working this way, but it's opened people's minds that it's possible.
Yeah, and I think many technology-based companies and teams were already doing a lot of that, but to see it adopted on a widespread basis I don't think anyone thinks it will go back to the way it was before. It's always going to be now a new normal for business. And what I'm seeing now is that frees up more time to think about what's next in terms of workplace productivity, and that's driving more interest in process automation, the automated decision support you're talking about. Before is a robot revolution, and this is typically software robots. This is how do you actually come up with the algorithms that really support decision making, use all these huge volumes of data that are being collected, and apply the AI and machine learning algorithms to really make a difference to the way outcomes are achieved, not just for efficiency, but also for the customer experience. Now, on the dark side of that, you've got all the equity issues and the difficulties of verifying and validating those algorithms and their outcomes from a social point of view. But that's a major trend, and we've got a large capability in AI and ML emerging out of the universities here, which have great courses in that, and really good capabilities coming into the business sector. Which I think is very exciting, not just at a research level, but in applied data analytics and how we actually take a leading position around that. The other big wave, and again, the capability that's growing in Australia that's exciting, is around both blockchain and quantum computing. So we have more than experiments, we have some leading work going on around distributed ledgers and how to apply those. And again, the capability is growing quickly, especially, interestingly, they're mostly in the small companies, but collaborating with the large corporates to bring those projects in, past the trial and into more of a commercialization phase. And on the quantum computing side, we've got, it's very early days, but we're doing some great research in that, not just on the quantum computer, which is one of Australia's big projects, but also on sensors. And this is where, while we say mining is kind of we're conflicted over our views on our mining industry. The spillover of innovation from that sector in the technology space is a really very interesting thing, and becoming an export industry in its own right, about how those technologies are could be applied in other industries. And I think when we've got to work on how to transition that traditional industry, but looking at some of those technology innovations and how to apply them in other sectors, like agriculture, like energy and utilities. That's a good opportunity for us to do while that industry is going to be forced to transition over time.
Yeah, no, absolutely. And it brings to mind one of the big issues, which is just the arms race on money, in that I know from lots of the work we've done that still raising capital for some of these startup businesses in Australia is more challenging. The pools of money that are available are still relatively small. The valuations that are achieved are not as high as they might be. And most of the customers will necessarily be offshore. So bridging that gap is incredibly important. And you can do it. And we've worked with some companies that have been able to raise capital offshore on really attractive terms and have been really successful. But it's incredibly important, I think, for all of us that we keep in mind that most of the prizes are outside Australia, as I know from the businesses you're working with. And I might bring in Mara at this point, because I know I've been watching you nodding and smiling over on the right here, because these subjects are very much close to your heart as well. you started out your career on more or less the other side of the world, partway between where I am right now today and where you are, and spent a bunch of time working on the West Coast in investment banking and technology, and have done all sorts of other things along the way. And then about 10 or 15 years ago, really started on a much more entrepreneurial path. And I'm interested in how much have you seen change over that period of time between where Australia was, 10 or 15 years ago and where it is today? What is exciting about that, and what are there things that concern you as we sit here talking with excitement about these amazing opportunities, but knowing that there are a lot of other people chasing them too?
Yeah, Nigel, thank you. I guess in some ways, not much has changed. It's pretty stark when you look at the top 20 listed equities in Australia today compared to 20 years ago, 30 years ago. It's a list of mining companies and banks, a couple of, big integrated high market share retail companies. And when you compare that to what's happened in not just the US, but China, other parts of the world, where you see the huge platform economies come out of the ground, and then the disruption that's happened around the very significant manufacturing base that, as Adam points out, we stopped kind of playing in years ago and moving into that, sort of free trade mode. So in many ways, not much has changed, but in many other ways, it's fascinating. We are very good adopters of technology. We can create stuff. Atlassian's a great example, but we're very good users. And we can compete extremely well in a trading world. And so the opportunity to transform the mining sector, the finance sector, the agricultural sector into those very themes that you've chosen around, what does it look like to create investment at scale in renewables, not just through the lens of unlisted, infrastructure that retirement portfolios can invest into and manage funds, but also in terms of what drives the very big corporates that, as Adam says, now have commitments towards net zero, and the radical transformation of our energy model kicking and screaming, right? We are Saudi Arabia disguised as this really beautiful green thing. And Adam, please correct me, I've seen several studies, but if you include scope 3, which, we must in the corporate world in evaluating investment grade genuine transitions to net zero, then as a nation, we have to look at the impact of our export flow as well as how we use energy here at home. And I think relative to overall GDP, it's some quite significant, 13 to 19% of our wealth as a very small population nation is fueling this. And we stand at this pivotal moment from an investment point of view, because on the one hand, as Robin, is suggesting, and I'm involved in a bunch of them, we have very exciting startups coming out of the ground. More than ever, they're leveraging tools that allow distance independence on talent. We can play into that whole drawdown narrative for the rest of the world because we have so much land and we're very good at services associated with that. And from an export point of view, you see, Fortescue Future Industries grabbing the opportunity, much like Mukesh Ambani in India, and saying, we are going for green hydrogen and everything else is greenwash, and locking in multi-billion-dollar deals. So suddenly, as a kind of ethical investment lens, we're beginning to see which are the financial institutions that are serious about decarbonization. And in Australia, by the way, and Adam, I'm really looking forward to what the BCA has to say, because your mojo, is relatively recent. Like 5-10 years ago, the BCA was a lot more like the Minerals Council from the perspective of the community sector observing who really is driving decarbonization, right? And I agree, there's great grounds for optimism. But right now, Australia is considering new coal, oil, and gas at scale, new, right? We're talking entire basins that, are climate bombs right around the country. Queensland, WA, Northern Territory, New South Wales, offshore oil. Like, really?
And yeah, and it's
to be net zero, like net zero by when? It's not so much net zero, it's 1.5 degrees. that we have to track to. And that means greater discipline. And I reckon the smart investors are going to call that out and de-risk their portfolios by just saying, hang on, not going to happen.
It's a fascinating question. I think it's a really neat segue into to dive a little bit deeper into everything around decarbonisation and power, and this whole energy sector. And there's one or two questions in the chat and the Q&A, which we'll come to in a second. But maybe for you, Adam, this issue around fixed capital formation, which is Australia historically quite capital intensive, and that's declined. And one of the significant areas of opportunity is everything around renewables. Really interested in your perspectives around that, whether that's with a BCA hat on or without a BCA hat on, because there's lots of forces at work here, but incredibly important, because would I put my money into some of these initiatives? No, because would I be confident they'd still be running in 30 years' time? Absolutely not. But really fascinated in your perspectives on that.
Yeah, I mean, there's a few angles. As you say, our rate of business investment, now we've come through this mining investment boom. It's at its lowest levels we've seen since the early 1990s recession. So we have a very low level of business investments. Actually, when I talk to our investment bank members, they all talk about energy as being a great untapped area of investment, particularly clean energy. So we can see huge opportunity, and obviously Australia has a lot of natural advantages in that space. I think it has been a real problem of a lack of policy certainty in this area. I think the national debate probably has not been very helpful to people trying to make long-term investment plans. I think we're starting to see the big money starting to send a signal that where it wants that money to go, and it is into sort of cleaner energy alternatives. So I think that'll help force the issue somewhat. But I think at this stage this is really where we need to see government and business come together, agree on sort of the road ahead. Obviously, agreeing on net zero by 2050 is a good start, but it's only a start. And actually developing those technologies to a level that is commercially viable, and a lot of the technologies don't exist yet. So I think that does require a combined effort from both business and government.
Yeah, and I mean, Robin, you may want to comment, because I know in one or two of your previous lives, you've looked at these issues around renewable energy, opportunities for investment. I know from our own business, there is just an enormous amount of capital seeking opportunities in industrial scale, renewables, behind the meter projects, more or less everything you can think of. If there's any kind of reasonably decent revenue stream associated with it, there's heaps of capital for it. So I'm fascinated in your perspective around that. And
yeah, so I think I often hear there's heaps of capital available, but getting access to it at the right stage is a problem we have in our innovation ecosystem, because we have a lot of great ideas looking for funding, but quite a distance away from being revenue positive, let alone profitable. So it's where we've got a bit of a gap at the moment, is that early stage support for a lot of the innovation opportunities. There's many examples of that, and it's the different funds look for later stage companies that kills off a lot of good ideas, at least in this country. And this is why you often see the flight of great entrepreneurial ideas offshore to see if they can have better luck elsewhere. So that early stage support is still quite challenging, and the corporates, and I speak from experience having done it as well, as we try and do these accelerators to accelerate the ideas, but that follow-up investment to really take it forward is quite challenging. And it's natural to weed out a certain number, but the innovation model that actually helps get things started, but then is prepared to carry through and look a bit longer term to say, okay, this may be 5 years or 10 years before it's really going to contribute to our margins, but their ideas worth exploring. And that's the trick. So I think the capital and funds may be there for mature ideas or half mature ideas, but it's getting that enough of a pipeline coming through so we've got enough bets placed.
Yeah, it's really interesting, because with the pure software type companies, and Atlassian was a good example, it didn't really need very much capital. In fact, it effectively bootstrapped the whole way. The capital they took for Excel, I don't think was ever touched. But the challenge we have now is some of the next wave of developments are often more industrial companies in nature. They're more capital intensive, and this is true in things like the, developing new bioeconomy type businesses, new technologies in relation to energy storage. And we raised some capital last year for Calix's subsidiary Lilac, which is involved in decarbonisation of lime and cement. And that company had a huge amount of money had been invested to get it to the point where it was ready. And I think, that is more capital intensive. And my question with that long introduction to it is, is the barrier from a corporate point of view risk appetite, or is it the quantum that's involved? Because the quantum, we're talking about maybe tens of millions of dollars often for that kind of beginning to scale up stage. So it's not, if you're a $100 billion company, it doesn't sound like very much. Is it the amount? Is it the risk appetite?
Yeah, I think it's hard to generalize on that at the moment, because we have some real standout corporates in Australia who are on the leading edge of investing and having that innovation fund themselves to do some real things with technology. I mean, you look at CBA has done interesting things. Fortescue, we've mentioned, Woolworths do really interesting things, and many others. So there are some companies who are looking at how they actually build that pipeline of innovation and support for the longer term, but they're not the majority by any stretch. I think a lot of the other boards do have a risk appetite problem. Well, they actually don't see it as a problem. They're very conservative, and they're looking at how do they actually get that contribution to margin in a shorter term than what many of the innovation opportunities can actually do. So getting that real investment in innovation and the separate and separating that out from the core traditional business is something I think we're still grappling with in many companies across Australia that may not see the need to do it. And but on the other hand, we're seeing everyone focus at board level on sustainability, and more there's good discussions at board level on that. So we've got to kind of bridge that gap.
And
yeah, Mara, exactly. Jump in.
I think that is the trick, right? To understand, like the Europeans, many Americans, absolutely the Chinese, that it is the urgency around both the climate and biodiversity issues. Like equity absolutely fits in here, and we must have that lens of, the social fabric that underpins that transition. But the transition is not nice to have. It's actually need to have. And the regulators are diving in way ahead of the governments, and have shaped also how business is thinking about it, right? Because when prudential regulators force disclosure on pathways that are science-based, suddenly the pointed edge of that question Adam raised, do we have the technologies we need? Interestingly, I think probably within 10% of Adam's membership of our biggest companies, there are those who say, absolutely, we have the technologies now. This is insane. Let's release them. And it's not just the failure to price carbon, although, of course, if we look at our carbon credit units, highly regulated, the price is shooting up, right? From $17 to like close to 60 in 3 to 4 years. So markets are doing what governments aren't. I think the policy conundrum is losing sight of deployment of these technologies. The ones that are not just pure software that can scale up on margins that are, self-funded with cash flow, but the ones that require public policy to say, we will commit, whether it's a renewable energy target or some sort of nature-based target that forces deployment at scale so that the big corporates can understand this is what the regulator wants. My investors are pointing in this direction. It's not an academic conversation about innovation at the boardroom over here and sustainability over there. That's how we're going to get there, right? So as a nation, I think the opportunity is here. It's just our politics are insane. And I don't know about you guys, but I think our next federal election is all going to be about weird tweets and sausage sizzles and, nowhere near the policy depth we need to have.
But on the other side, I think we are seeing the rise of a socially aware consumer that's becoming a significant segment of our population and growing, and not just the traditional digital native. It spans all age groups and different parts of the community. So if that's a groundswell, it's certainly a start that we are seeing those consumers demand attention from both corporates and government. So if that continues along a path that creates the urgency, then we may see that as a driver for change. But one of the things that we really struggle with is getting that sense that the investment in renewables and climate tech and everything around biodiversity, as you say, it's not yet seen as a burning platform, even though it's almost literally so in this country at times, that we have to get that urgency.
I don't know. It depends, right? It depends. I read this marvelous article about Twiggy Forrest, Andrew Forrester, our big Fortescue iron ore magnate, where he says the energy transition is like a knife fight in a phone box, right? Like there is a cutthroat multi-billion-dollar grab happening. And I see it emerging in positive ways around land-based solutions, as well as on, the fast tracking of green hydrogen and so forth. So it is very, very interesting to see how we can miss how quickly it could happen on the one hand, and how positive that is, because it does feel so boring and incremental and lacking in attention, in the paper. Yeah.
Yeah, I completely agree. And, we talk about, one thing I think has been quite topical for us in recent times is everything around the bioeconomy. And it's a term that gets bandied around. And what does it really mean? Well, a really large part of it is for several hundred years, mankind has used fossil fuels as a resource for energy, and in the last 100 years, plastic. And if we just stopped using fossil fuels for plastic and made plastic from a biological source, it would create massive demand for a feedstock from which to make it. The technology to do this is well established. It's not terribly difficult. You can grow sugarcane, make sugar, turn it into ethanol, turn it into ethylene, and make polyethylene. You still have lots of pollution issues with the plastic, but the point is we don't need to wait 50 million years for fossil fuels to be formed. We actually know how to grow this stuff and turn it directly into an end product. And that change in the efficiency with which we use resources and doing this then in a sustainable manner, it's an eye-wateringly large opportunity. I hadn't heard the comments from Andrew Forrest about the knife fight in the phone box. But certainly sitting here in New York, that's exactly what it feels like, because there is huge interest in all sorts of niche segments of activity, which have to come together and have to work in order to deliver what we need. For example, in energy storage, battery storage, huge amounts of money being invested in these businesses. Australia has some great technologies, but those businesses have to be able to progress, and they have to see the world opportunities and realize them. So I think, it's, again, I might come back to Adam here, as you sit in the interesting position, try to in some ways bring together a business voice to call for a policy platform, or put forward things that should be part of the policy debate. As you hear us talking, where, between Robin, Mara, and myself, we've all been down the path of leaving large organizations and trying to drive this change within smaller organizations. You've got the exact opposite problems. How do you respond to this kind of vigorous and enthusiastic, but also perhaps anxious perspective that we all share?
Yeah, well, that's sort of $1 million question, I think, Nigel. I think the question is, how do we sort of bring it all together? And I think one thing we kind of struggle with a little bit is, what are we asking government to do in this space? Like, I don't think, and me being a fairly free market economist type, I don't want to see governments picking winners and saying, okay, well, we're all going to do, this form of technology and we'll all invest in it. But at the same time, we're a small country. We're only going to be good at a few things. We'll have advantage globally in a small number of things. So how do we find those things? How do we get things to scale? I think it's a really important question. I think there's a lot of things happening across a lot of industries, and a lot of government support kind of gets diffused. We dabble in AI, they dabble in a bit of clean energy and hydrogen, do a bit of this. but none of it's sort of really kind of getting to scale. So I think that's kind of a really interesting question for us, is how do we collectively kind of get some of these projects to scale where we're globally competitive, that's not in a sort of a picking winners sort of approach, which, you know, I find governments try to pick winners, they almost inevitably pick a bunch of losers.
Yeah, now, I'm a big supporter of the model where large corporates get behind smaller innovation opportunities, and that ability to get that first major customer and that commercial contract is such a major event in the maturity of a startup or a small business, to actually start getting that feedback and use that as a launching pad. So the question is then, how does a big corporate or a big organization support that startup? Because it does require, as an executive who's done many of these, you have to take a level of risk that, you know, corporate in Australia particularly aren't that supportive of failure. So, you know, we are taking a risk on a small company, sometimes an innovative idea that may or may not work. But if you can actually get behind it and launch it, and then not lock it up so it's only for you and not for, you know, the rest of the world, so it becomes a viable business, I think the more we encourage corporates to work in that ecosystem of innovation. Just to point on the government support for the CRCs, the Cooperative Research Centres, I think is really great, because you do get interesting ideas coming through those centres in particular areas. I think Australia is good at applications of technology. Like we actually can apply it, especially in agriculture, mining, food tech. There's some really interesting ways we do go about that. And as you say, the trick is, how do you scale it? And, you know, I firmly believe that you've got to get strong commercial partnerships in place with real customers, like major customers, to fully develop those ideas.
Fantastic. And just for anybody that's watching on YouTube, please do use the like button or the share button. Every time you do, a lot more people get to watch the discussion, which is very helpful in getting these messages out. And there's one question in the chat which I thought would be interesting to come to, which is the kind of the geopolitical aspects of all of this. And in particular, you know, David Olson asks, despite, and I'll paraphrase a little, you know, despite the various political tensions there are with China, there is, you know, quite broad business support for engagement with China on everything around net zero collaboration. And certainly from what I see, somewhat behind the scenes, you know, China is very purposefully investing in a whole series of things which are very relevant to this. Thorium, nuclear power is one example. Really interested in all of your views on how do we navigate the somewhat tense geopolitics, given that, you know, China in particular and the Asian region more broadly is such a huge opportunity right on Australia's doorstep.
Yeah, and we obviously have to have a more sophisticated approach to China than some of our more recent efforts, because it is, we all know it's our major trading partner by a very, very long way. And
yeah, well, as Adam said, there's an awful lot of iron ore getting exported, and I'm guessing most of it's going to China.
Yes, yeah, and we've got much more much more sophisticated relationships than what it seems sometimes in the media. And we have, it's again one of our biggest opportunity areas as a country to transition and work with them on renewable energy opportunities, on all sorts of technology things, with the understanding that, our values are different, and we have to be able to navigate that. And we could do with an upskilling of our diplomacy skills at times.
Yeah, I agree. I think there are ways of doing it better. I'll leave it to Adam for the big blow on this, because of course he's the one that will have the most influence on what actually happens. But from my observation, there is a really significant potential partnership that can happen between Australia and China industry capital around decarbonization in the region. One of our big challenges is how to shut down a whole slew of coal-fired power stations and gas, over the next years, decades, with business models that leverage new technology, capital, and the ability to tap even carbon markets, offsets, quality offsets that value early shutdown, combined with, that innovation growth that Robin talks about. And it's absolutely fine for our technology to commercialize and scale overseas. In fact, it's necessary, right? It's not just having our big corporates kind of experiment, it's deploying in Asia, in North America, in South America. So I think that natural partnership is there. What I find so confusing is how a lot of the capital that we attract from China goes into new fossil fuels or ports, infrastructure for exporting fossil fuels, or old school agriculture, not regenerative, not restorative, right? So how do we tap into the positive side of the China investment appetite in order to enable this shutdown and really get scalable business models out of it?
Yeah, absolutely. Adam, do you want to comment on that? That's a big, important question for this year, surely.
10 years ago, we were all talking about all the opportunity is China. It is the biggest growth engine in the global economy. It's where we're going to get our future opportunity. That hasn't changed. It's absolutely essential we learn how to deal with China. I agree with all that's been said about getting the diplomacy right. I think at a business level, life goes on. I think people are kind of working business to business and they're doing it effectively, notwithstanding the general noise. So I think that's a good thing. And I think if we can kind of let that continue to happen, I think that's a positive development. But I do think, if you look at some of the new opportunities in these sort of areas around sort of technology and services, it does require a different approach to when you're trying to sell iron ore or you're trying to sell coal. I'm not saying there aren't challenges for those mining companies, but it's a simpler proposition. But I think you really do need to understand how to work, with different cultures and understand, just how to deal with people with quite different value sets from yourself. So I think that's a huge challenge. I think it's a really important part of this equation is getting that right.
Look, I think it's incredibly important, and I see that a lot here in the US, where there are so many commentators on China that judge China through the eyes of local American politics and value systems and don't pay any attention at all to how the Chinese are actually thinking about the problems themselves. And without that knowledge and perspective, the views are completely worthless. They're literally worthless, and yet there's so much of it. And, my perspective on China is it is, as a country, it has tried to be self-sufficient for most of its history. It doesn't like relying on other people. If you think about where it's invested its money, it's invested hardly $1 in acquiring coal assets offshore. It's invested a lot of money in rare earths and things like that. And it buys coal and it's bought some ports, but is it trying to buy the underlying assets? No. Why is that? That tells you something. So following the money is really interesting. And where it has also invested is in things like thorium cycle nuclear power. They're pretty much 10 years into that program. They have a commercial demonstrator, I think now running as of a few months ago. Watch that with interest, because if they can get that to work, which I assume they will, they can then switch off the coal-fired boilers and put different boilers on all the existing gen sets and power them a different way. And then they won't be reliant on coal anymore. So some of these things, China has not hidden what it's doing. It's all there to read about if you're interested. And it's surprising how often people don't pay attention to all of that. I was going to ask one question, and I don't know if I'll comment on this briefly myself, and it maybe you can add to this as well, which is a specific thing around Tesla's virtual power grid and has this been activated in Australia. And I think it illustrates a really important point, which we've seen with large motor manufacturers here, that the question, well, if we have all these electric vehicles, isn't that going to overwhelm the grid, when in practice the charging of the vehicle is going to happen at night when the grid is not much used? And the cars themselves, if you've got a 60 kilowatt hour battery in your car, then that's more than enough backup power at home. So actually the cars can be part of the solution. Now I don't know how far Tesla has gone in really activating that capability, because if I remember rightly, unlike most people putting batteries out into the system, it's really kept significant control over its battery network. I don't know if you've seen that, Mara, through your work with Innova Community Energy.
Yeah. And so, for Adam and Robin, Anova is Australia's first community-owned energy retailer, capitalized through, community capital markets now through the Valley of Death and scaling up in a very fascinating social purpose model, 50% of after-tax profits reinvested into the transition. And Enova absolutely has as its purpose working in that decentralized, distributed energy model, which in Europe and Germany is a big part of the mix, with communities owning their wind generation and so forth, and huge ecosystem around peer-to-peer trading, and the potential for not just distributed ledger, but virtual power plants that come out of the ground. Now, Tesla has two plays on that, actually. One is through the cars, and famously in Australia, we believe in having really high polluting old cars. We're happy to import all of Singapore's fleet, after it's used, instead of driving EVs. So it's a little bit mute how quickly we activate that network, because we are so behind the 8 ball on EVs. A war, by the way, might change that, right? Pretty quickly. All of a sudden we'd realize what $2, $3 a liter looks like. But Tesla also has residential and commercial scale batteries. And it is wonderful to see the virtual power plants that are coming out of the ground in South Australia, crowning example of what happens with deliberate good policy intent on both sides of politics, where you have a change of government and they realize the benefits of holding on to that renewable innovation. And, I'm working sort of on the periphery with the potential to scale that model up into, large master plan communities, where we house 20, 30, 40,000 people as they scale. How does a VPP look like in there? And that also gets the property sector to think hard about what a standard affordable home looks like. Is it pre-designed for battery, right? And that can happen before an EV and really pays back once you bring them in at lower cost at scale. So there is hope here. But, Nigel, I think when we think about companies like Tesla, and how quickly a paradigm can change, it brings me back. This is like a weirder way of looking at it, but I just wanted to add this lens in from an investment point of view. Whether you're in China or Australia or Berlin, this idea of modern portfolio theory, which maximizes your ability to get returns by diversification when things happen, like inflation, like changes in interest rates, and we're all thinking deeply about those issues. There's this marvelous book, and I'm very grateful to Howard Pender from the Australian Centre for Corporate Responsibility for putting me onto it, called Moving Beyond Modern Portfolio Theory. And the authors may well get the Nobel Prize in the end, knocking off the Nobel Prize that was won in 1952 for developing this theory. Because what they're pointing out is diversification risk is only able to address a very limited part of a portfolio, like maybe 6%. Up to 94% is systemic risk. And systemic risk looks an awful lot like climate change, profound levels of social inequity, nature at risk, right? And so those big corporates that catapult into this new model are part of that transition. And the role of investors is actually to address that systemic risk. So although, governments don't like the fact that proxy, voting is going to increasingly say, show us your goods. Are you making this happen? Where is that innovation in your plan that's getting you to your net zero goals in time, not 2049, right? That is going to really, investors are going to change how companies like Tesla are valued on the one hand, and how those that are not decarbonizing are going to, in a sense, get edged away because of that beta risk, that systemic risk.
Yeah, I think that's a really interesting point, and it brings us perhaps neatly back to where we started, which is capital investment in Australia, the opportunities for investment, and exactly as I think you're calling out, if you don't invest in the future economy that's emerging, which right now, most of that isn't listed, so you have to go and look somewhere else to invest in it. But if you don't invest in that, what are you left with? So I think this whole piece around, where companies invest, where government support is provided, where people's pensions superannuation is invested is incredibly important. And maybe we could just have a bit of a discussion we've got about 10 minutes remaining to dig into these themes around investment. I think it's very topical in that there's been a huge amount of focus on ESG related investing over the last couple of years. Enormous amount of flows into these funds. Morningstar just delisted something like $1 trillion of stocks. They've said, no, these aren't actually ESG related investments at all. The green veneer is so thin that we're going to wipe them out. PitchBook has just published a similar report around greenwashing in private equity. And so something which I think we expected to happen, perhaps not quite this soon, is much more scrutiny by investors around where is the money really going? If it claims to be impactful, is it really? So, and I don't know who wants to go first, but views around what we should be doing around investment, what we should be expecting of companies and institutions as they invest, if we're to drive the shifts that we would like to see. Robin, do you want to go?
Yeah, I think this is probably more one for Mara, I think, because Australian Ethical is a great example of a model that works on that. But it's, yeah, I think it's what both consumers and investors are starting to expect in the pressure they put on companies on boards. I don't think it's maybe it's not as strong as it's going to be in the future. I think it's probably a way to put it, but we do expect that ethical overlay to become more and more important in the decisions that are made. And I think it's getting the right framing of that conversation, I think, is important, so that it's clear how to see through some of the greenwashing that goes on, and make good decisions, both as an investor, the small scale investor, and the large funds, because I think corporates and boards need to respond to that. It's just getting the right level of conversation around it is a little tricky, because it gets quite polarized.
We've seen it with some technology platforms as well. I think Robinhood has now made it possible to vote all your underlying shareholdings. So giving the ability for people that sit behind bigger funds to drive some of the voting can only increase the pressure. But as Robin said, Mari, Australian Ethical has been involved in this for a very long time. And, so this is, for those that don't know, a business that now has about 6.5 billion Australian dollars funds under management in round terms, has been involved in ethical investment for 30 plus years, has performed incredibly well. What's the role that organization has played, and how much of an influence do you think it can have, perhaps beyond what it's doing today with the funds that it currently controls?
Yeah, thank you, Robin, for that lovely sort of, opportunity. I've been on the board since 2013, and back then we had 400 million in funds under management. And the interesting thing is, if you look from kind of like a timeline of when the company was founded in, those heady days of the late 80s, building on Club of Rome and moving into the Earth Summit in 92, and then, the beginning of Kyoto, that whole period was kind of like a very flat, a very small group of funds under management for deep green nonprofits. And then from 2013, you begin to see this uptick, and then you begin to notice that it is exponential. And if you get the right team, the right platform, the right technology, and to your point, Robin, the engagement at the B2C level with people that really care about where their money is. And then you begin to notice that it's not just young, deep green people, like the number of people switching in who are mature aged, approaching, retirement, really care about what they leave behind, and the amounts are growing. And then you see that trend ticking up in other parts of the world. And then you go back to that narrative about where does the capital come from? Because of course that portfolio, famously has this, secret recipe, which is our charter about what we support and what we avoid. And that has limited the investment universe to something that, represents more of an ethical kind of overlay for the entire portfolio, not a tiny little option on the side. And interestingly, we do see these kind of everyone becoming ESG, but then you look at their portfolios, which now are public for the big stocks, almost all of them are invested in Santos and Woodside. which are, our equivalent of kind of Chevron and Exxon. And you cannot see a plan B for those companies unless they pivot on CapEx from today, 100%. And we see the opposite. We see them buying deeper into oil and gas, deeper into, new reserves, et cetera. So it will be very fascinating to see that growth continue, Nigel, and to watch that example be a case study that not only scales, but becomes a model for how you can do that in listed markets profitably and attract really great talent. That's one of the really exciting things about being on that board, is just seeing the amazing people. It must be like Twiggy when he puts a job up and suddenly 3,000 people want it, right? On Fortescue Future Industries. We feel like that, the kind of talent that we get that are joining. Oh my God, it's just such a privilege to be there. Well, so I think
Oh, just lost you there slightly, but we're almost out of time. So I was just going to end with a real short observation from each of you. What's one thing you want people to go away and do today, having heard this conversation in kind of 60 seconds or less? Mara, do you want to go first? And then I'll come to Robin, and then I'll let Adam round it out.
And I'll build on the fact that you guys, BCA is going to produce a future of industry. My one thing we didn't really get to talk about, but I think it's a really interesting link back to Robin and Adam, which is impact investment, which we didn't talk about, right? Intentional investments in models that have a primary aim of environmental, social benefit and have returns, right? That should be part of the intention of a big Australian corporate, to diversify its innovation portfolio, its product development, and its own capital investment, especially the property developers and others, towards impact. And that impact can unleash scalable models that, complement an ESG lens.
Fantastic. Robin, what about you? What's one thing you'd like people to go away and do?
I would say, one thing, just take a little more risk on a new idea, especially a small innovative company that may or may not be there in the future, but give it a chance either as a corporate or as an investor. Just sort of take one little step further in the level of risk you'd accept.
That's great advice. And I'm guarantee you will learn from that you will learn something useful from it. And like taking a different route to work by accident, it's amazing what you discover along the way. Adam.
I think the one thing I'd like Australia to do is remain open, not turn inward. So some of those forces I talked about right at the start, I think, is creating a bit of a movement towards sort of back to the Fortress Australia. Let's sort of turn inward and develop our own sovereign capability. We'll only succeed in any of these areas if we tap in to global capital and are very open to global capital and people and ideas. So we've got to stay open is my final thought.
Fantastic. And again, I think that is incredibly important. Australia is absolutely has home to extraordinary opportunities. We very much look forward to seeing what the Business Council of Australia has to say about the nature and shape of those opportunities and where the policy debate ought to be focused heading into this election year. Just to look ahead a little bit, we have got some fascinating episodes coming up over the next few weeks. Next week, we have MMT is at the gates. Talking about the very topical issue of is spending a bit of an answer to solving the problems that we face with inflation around the world. Paul, do you want to add to that? Because I know green jobs is very much your baby. So,
well, it's all of our babies that we want to grow up, and so mapping the sustainability of companies in the job market and the growth in the jobs versus the layoffs of unsustainable companies, which we've seen during COVID the past 2 years. So join us next week for the Green Jobs Report, as well as the author of the Green Jobs Guarantee, Dr. Pavlina, as well as Dr. Fadil Kaboub and Amir Khalegi and myself and Nigel. Nigel, is there anything else you want to preview? Okay, great.
Yeah, fantastic. So yeah, go ahead, Paul.
Yep, and then the path to climate action continues in March. So please sign up at the esgx.org website. With Cassandra Kelly from Pottinger, who many of you know, Amber J. Freeman from Etho Capital, and Rebecca McGrath. So please join us on International Women's Day. And then forthcoming, speakers are being finalized. We talked about Tesla already with battery systems, heavy vehicles, and other electrifying of the economy. I'm super excited for this because my first job at McKinsey was the energy practice, and worked in the energy practice for about 8 years. So I know where all the skeletons and dead bodies are buried in the coal mines and methane leaking fields. And then coming back to even more electrification with experts from Rincon Consultants, who are building climate action plans for cities to help make cities more sustainable. And our producer, Nick Gower, is definitely essential to all of this moving forward for cities, helping to fund and finance their climate action plans, and some of them being equitable climate action plans. So super content-rich schedule ahead with insightful, wise speakers like today. So I want to thank Robin, Mara, and Adam for joining us today. And Nigel, as always, thanks for curating us into the future with some long-term thinking. And a shout out to our producer, Nick Gower, for making everything run smoothly. So Nigel, anything to close?
That's it from me. A fantastic discussion. Thank you all very much. And we have some really interesting material ahead too.
Right. And I will wish you a bientôt from Chicago. And the next time you see me, I will be in Paris, France. So we'll continue our cross-country ESGX.